Dr. Chilwan, welcome to Bloomberg. We've had your numbers. We see the growth and profitability, but you talk about costs. Talk to me about what is going on at DIB. Are you a growth story or a cost-cutting story?
Well, I think we are a growth story. We always have been over the last 5 years or so. As soon as we completed our consolidation phase, which started from 2008 to 2013, we embarked on a growth phase. We just thought that we had the right foundation to take the bank forward. It was a sleeping giant, if you may, for a very, very long time. And since then, we've been progressing, putting our best foot forward, and the top line numbers just seem to overwhelm everybody.
You talk about growth, and this is what takes me to the Kenyan franchise. You said it's going to be the stepping stone for further expansion. Is the plan, your plan, to expand here in the region or more in Africa?
Manus, from where we sit geographically in Dubai, if you just visualize that we are trying to connect three dots. We are trying to connect Far East Asia, hence we went into Indonesia. We are trying to connect East Africa, hence Kenya. And we are already operating in Southeast Asia, which is Pakistan. So if you just visualize, we are just trying to connect and make our own triangle. This is where a quarter of the Muslim population is. The demographics make a lot of sense. These are nascent markets. Banking in general is not very penetrated.
So will it be organic growth for you rather than buying?
It can be a combination of organic and inorganic. Obviously, in certain markets, we've done brownfield operations. In certain markets that I'm referring to, we've done greenfield operations. So I think there are a lot of combinations that are available to the bank. Can be a mixture of both organic and inorganic growth.
Okay, so we'll see. Hopefully, you do a deal. How is the economy doing here? You're at the front edge of Islamic banking. The past 6 out of 9 months PMIs in Dubai were negative. Give me a sense of it's not too bad. It's getting worse. Where is it on the scale for you?
See, listen, Dubai is a global bank. It has an iconic status. If you look at the last 3 or 4 decades, the leadership of Dubai has always looked at economic development a little differently. And what I mean by that is we create capacity and then over time consume capacity. Now, clearly, macroeconomically, there always has to be an equilibrium between supply and demand. The moment that supply in any sector would be higher than demand, you would find some muted prices. Now, what that means is that today, Dubai has created capacity across the various sectors that we are talking about: real estate, healthcare, education, aviation, and over time, we would be consuming that capacity. And I think economy today, irrespective of what people say, I think is on the right track. Even IMF have revised their forecasts in terms of GDP.
No bubbles for you. No material risk in any of the sectors that you lend to.
No, as far as the bank is concerned, I think we've got robust asset quality. We've not seen any signs of stress over the last 9 to 12 months, and we feel that clearly economy is where it is. One has to find adversity within the challenges.
Can I ask you about loan growth? Because you're outperforming your peers. You're doing between 10 and 15%. Can you do 15% loan growth 2018 first of all?
Well, we are on track. If you look at where our guidance is in the first 9 months, we've achieved every guidance in the key metric that we had given for ourselves at the beginning of the year. So we would be within the range of 10 to 15%. Now, clearly,
at the upper end of the range.
Well, you can say maybe mid-range. Yeah, but yes, we've been outperforming our peers over the last 4 or 5 years, and that necessarily means that we've been gaining market share.
Now, you gain market share. You're on track to the middle of the range. Thanks for the guidance. But that comes on a risk reward, doesn't it? In terms of NPLs, can you still hold the NPL target of 3 to 3.4%? With that growth?
Well, we've done that in the last 4 or 5 years, right? So one thing that I would like to clarify is that whenever we grow, we do not compromise credit quality, neither do we compromise price. And I think both these key metrics have been validated by every analyst or rating agencies for that matter. And that's the very reason why today the credit quality of the bank is robust, reasons why rating agencies have upgraded the outlook of the bank.
When we look at the banking landscape in Dubai and Abu Dhabi, merger, acquisition, consolidation is the key word. Do you expect a mega deal within Islamic banking? Is there going to be a big deal within Islamic banking in your view?
Well, I guess that there's always an opportunity for a mega deal within conventional or Islamic banking. It just needs to make commercial sense. I think usually mergers are approached by common shareholding, but then if there are no synergies and no commercial aspects of an M&A transaction, they do not see the light of the day. So the transactions that have happened or have been announced have synergies in place, and that's why they are being done. So Islamically, I think we'll always be on the lookout as an acquirer to see if we can look to pick up a potential target, but nothing on the cards as of now.
Well, the government is 30% of you. Are they actively saying to you as a CEO, be on the lookout? We want you to be the aggressor rather than the aggressed.
I would say that the government is only 30%. 70% of the stock is with local and institutional investors. I think the government is very pragmatic, I must say. They hold the stick from the middle. They make sure that transactions, if any, should be looked at commercially, and we do not do mergers in Dubai for the sake of mergers.
If you had your wish list of where you would like to do an Islamic banking deal, where would that be?
Dubai. There's no other better place than Dubai. Clearly, I think we are on the road to be the global capital of Islamic economy, and I would not trade it with anything else in this world.
Tell me this, there's lots of initiatives in terms of stimulus coming from Abu Dhabi, visa changes here in Dubai, along with a number of other stimulus programs. How much of a transformation game are the moves that His Excellency has introduced? How much of a game changer could it be for Dubai?
Well, the leadership of Dubai really looks at economic development from a long-term perspective, and I think the reforms that we are now talking about and which have been introduced in the summer of 2018 clearly are revolutionary in nature. They add to the feathers in the cap of Dubai any which ways, and it's just not safety and security and infrastructure, but also the ease of doing business, the ease of living and residing in a country and an emirate like Dubai. So I think they would be revolutionary, and everybody would have to adapt to what Dubai has in mind.
Can I ask you, Dr. Chilwan, in terms of global markets? I caught up with Sergio Motti, I caught up with Jess Staley. I want to get your take in terms of the dislocation in global markets that's taking place right now. How do you view the equity market rout of October?
Well, clearly there had to be a market correction as far as equities were concerned, but it's at the lowest point in time today, and hopefully, we will start looking at northbound pressures and markets will start recuperating and recovering. It's a cycle, right? When equity markets are down, the fixed income markets are up, and vice versa. So I think investor always has an opportunity to invest.
Is it a healthy correction? Do you think there's anything in this that could stop the Federal Reserve in its tracks? How would you describe this near correction in markets?
I feel that the Federal Reserve would look at further interest rate hikes, over the next 9 to 12 months. That would mean, obviously, there is growing inflation and they've got to curtail the inflation. Yep. So they are looking at their economy, how those moves would affect the pegged economies is to be seen. Because clearly, I think the objective of the US is to curtail inflation, rise interest rates, but one should also not forget the impact that it would have on economies that are linked to the US through a US dollar peg.
Can I just finally ask you, is that the biggest risk for you going into 2019?
Well, when interest rates rise,
yes.
Obviously in order to curtail inflation in the US, but since we are pegged, when interest rates rise, EBOR curves will also rise. Now, when that happens, both sides of your balance sheet will need to be adjusted. Asset yields would have to be repriced, so banks would make more money,
yep.
but also banks would pay a lot of money on customer deposits. What is interesting to see is what impact would the interest rates have on the asset quality of the banks and the financial institutions within the region, because sensitivity curves have to be built in, and one must see that a rise in interest rate scenario also is affordable from perspective of corporates and sovereigns in terms of repaying their debts.
Okay, that's the key thing. Dr. Chilwan, DIB CEO, thank you so much for joining us on Bloomberg.
Pleasure, Manis. Pleasure to be here.